Hello and welcome to Crypto Weeklies. In this video, we are going to do a summary of the crypto damage report. None of the content financial advice. Right now, the price of Bitcoin is at around $66,000. It has come down quite a bit from that potential area that we were discussing. The yellow line over here at around 78, 79K. Like the past bear market, once this area got rejected in June of 2022, there was a significant drop. Now again, just shy of this yellow line from that 76K, the drop has been at around $10,000 at one point. The price of BTC was as low as about 65K, so about $1,000 lower than what it is today or right now. So where does it go from here? Right now, Bitcoin after leaving that accumulation zone for the last couple of weeks is now back in that accumulation zone where the composite risk per hour, all of our risk based models is less than 0.3. It's at 0.28. Similarly for all other cryptos as well. Again, Sol and Tron are exception, but most of the cryptos are back in that accumulation territory for the bear market, but it's at barely scratched the surface of the accumulation zone. So where could it all go from here? With respect to the 200-week simple moving average, right now it's coming in at around slightly less than 60K. It's at $59,200. I would imagine the bear market to not be over until price at least goes to the 200-week simple moving average or spend some time below it, ideally, like it did back in 2022, also for a brief time in 2023, and in 2018 2019 time period. Again, you can see even in 2015 there were, whenever this blue line over here turns white over here, like it did at this area, a shorter area over here in 2020 as well, there were a couple of weeks. Again, if you ignore this area, you would see that this line had turned white in early March 2020, as well as at least touch this blue line in that 2018 December 2018 drop. In the last bear market, price action spent almost from June 2022 till February 2023, so little over 7-8 months over there, and again a couple of months in 2023 as well, so almost 10 months below 200-week simple moving average. This time around, the 200-week simple moving average is coming in at around 59,000. This is an increasing function over here. For now, let's ignore the 300-week and just focus on the 200-week over here and try to come up with what an extended version of a 200-week simple moving average could look towards the end of 2026. Towards the end of the year 2026, the 200-week simple moving average, the worst case scenario for the 200-week simple moving average is at around somewhere between 69,000 to 70,000. That could be the 200-week, as price action has spent in the last 200 weeks considerable amount of time at elevated price action. So for example, 122,000 is almost more than 2x of the current 200-week price. So it would take a lot to get this under 70K towards the end of 2026. So if price action has to spend a lot of time below the 200-week simple moving average, and ideally sometime below the 300-week simple moving average, which is currently at around $51,000, and that one, the 300-week simple moving average has a steeper climb as the raw value is only 51K, and the last time Bitcoin was lower than $50,000 was all the way back in 2024, in February 2024. So since February 2024, almost 2 years, more than 2 years, that's over 105 weeks out of the 300 weeks. So more than 1/3 amount of time price action had spent, even including the last bull market, because 300 weeks is ideally over 5.5 years. So that includes the 2021 rallies as well, some part of the 2021 rallies as well. So the 300-week simple moving average at that December end could be somewhere close to 60K. So 60K 300-week and 70K 200-week simple moving average. So those areas could be where again price action would find some support. If not some support, ideally when the price action goes below those levels, that would be a clearer accumulation zone for Bitcoin. And again, and for after Bitcoin has bottomed, it might take a few weeks to months for other cryptos to bottom as well. So right now, looking at the bear market kind of dispassionately in using monthly candles, monthly momentum or Heikanhashi based candles, the last time around, since the bear market began, it took about 12 candles from December 2021 till December 2022 to kind of settle down from the bearish market to a bullish market. This time we are at 1, 2, 3, 4 and 5th potentially. Now as March is coming to an end, 5 months are over, and you can see the drastic part of the drop was over in 1, 2, 3, 4, 5, 6, 7. One could argue the 7th month had already done most of the damage when the price went below 17,000 at one point, and then again there was a slightly lower low in November, but again accumulating in that early starting the accumulation at that early drop in June 2022 was not the worst idea. One could argue 2 months more from March would be April and May. If April and May also have like a big candle body drops like June and May in 2022 had, then it would be a much clearer accumulation zone for Bitcoin at that point. One observation from the last bear market is that the candle bodies this time around are different. So for example, the momentum based candle bodies 1, 2 and 3 were steeper drop, whereas the 4 and 5 were almost sideways price action based candle, where the candle thickness was barely visible. But this time around, one could clearly see that all of these candles are steep drops, 1, 2, 3, 4 and 5. So there could be a relief candle or a slightly bearish candle early in April or in May, and still one could argue that in that drop or where the price action finds a support somewhere close to that $60,000 like it did in February 2026, that could be an optimistic scenario for Bitcoin accumulation in 2026. The contrary to that is the bear market before that was in 2018-2019 time period. This one is again 1, 2, 3 bearish candles. Even the 4th candle had a had some kind of a candle body thickness in the 5th candle as well, and then 6, 7, 8 and 9 were essentially in the range of that 6th candle. So from that 8,000 to that 6,000 range, all of these next candles were in line with that range that got set early on in the 1, 2, 3, 4 and 5th candle body itself. So the thickness of the 5th candle was essentially where the price action stayed for the next 1, 2, 3, 4 and almost 5 months over there. If something similar were to happen, so for example, the 5th candle over here is 1, 2, 3, 4, 5 is March of 2026. The area or the trading range for Bitcoin, let's say well established trading range, is between 65k and 80k for the next 4 or 5 months, and then some drop or penultimate drop after those 4 months would be April, May, June, July, maybe in August, where there is a first area where the price action kind of makes a turn to the downside, let's say in August 2026, and then eventually settles for whatever the floor is from that range. The last time around, the year to date ROI for Bitcoin was 65% from the yearly open for January. This time around, let's say the yearly open for Jan was closer to 97k. So a 55% drop instead of a 65% drop at the bottom takes the price action close to 45k for Bitcoin. Now coming to our own models, where is the price action? This is my own website, cryptoweeklies.com, link on the bottom of your screen. Where is the bottom? This is the polynomial regression based mathematically derived fair value, the white line over here. Whenever the price action is below the white line, it's essentially again, a not financial advice. It's a good time to DCA, but again comes with a caveat that better price actions are usually, or better times are usually when the price is below 1 standard deviation residual, or even the 2 standard deviation residual, ignoring others. Let's say start with 1 standard deviation residual. That would have enabled an entry throughout 2015, 2016, also later half of 2018, early 2019, also in 2020, and from June 2022 to essentially December 2023. That was area under the 1 standard deviation accumulation zone. Right now that 1 standard deviation is close to 59,000 to 60,000. Again, these support do not hold for longer time in the bear market. They usually go down as the price action goes down, and the support kind of breaks down to the downside. So that's the first area to look for Bitcoin, below 59,000 or 60,000 in later half of 2026 could be that area where price action could be in that accumulation territory. The worst case scenario for Bitcoin is, again, does not have to go the 2 standard deviation residual band to the downside. It spent only a couple of weeks in March 2020, and also a couple of months, not more than that, first in starting November 2022 till January 2023, and a brief stint between August and October 2023. So that worst case scenario for Bitcoin is at around 45k, which again coincides with that potential drop from the yearly open. A negative ROI of about 50% for Bitcoin could get to that territory. But again, instead of hoping for the worst and accumulating only at the bottom, an accumulation zone at, let's say, a lower risk level makes more of a sound analysis, because again, as you move further down the regression bands, let's say regression band number 3 or 3 standard deviation residual, again price action did not go below that in 2022, even in 2020. So as we move further down the regression bands, the likelihood that the price action has to go there goes down, because 1 standard deviation probability is 68%. That again, the risk zone is within that. So there is a 68% chance that the price goes and stays within that zone, the yellow line and the green line. Whereas again, as you move further away, there is only a 5%. So for the 2 standard deviation residual, there is only a 5% of the price action stays below the green line. And even for the 3 standard deviation, there is only 0.3% or less than 1/3% where the price action has to spend some time below it. So the rather than being greedy at accumulating only at the bottom, a very well established accumulation zone with a dollar cost average strategy below those accumulation territory, personally speaking, again not financial advice, has worked out the best for me, at least in the 2022 bear market and also in the 2018-2019 time period as well. So now where can Bitcoin go from here, from the time weighted average price perspective, which is again the two models that we saw, the regression model and now that the time weighted average price model. These two models account for almost 50%. So the log regression deviation is about 24%. The time weighted average price weightage is about 18%. And then the drawdown, which is again potentially out of our hands. Again, nobody can control the drawdown from the all-time high, or create a model, forward-looking model based on that. So time weighted average price model, whenever the model says that the price action is in risk level 3 or below, that's essentially when the bottom is close to us. So in the 2018 bear market, the price action bottomed at risk level 2. In 2015 bear market at risk level 1. In 2022 at risk level 3. One could say that in 2026 bear market, risk level 4 or even risk level 5 would make a compelling case when to accumulate Bitcoin. Right now, the price action is risk level 7, and it is again where the penultimate drop or the cliff before the penultimate drop that's the risk level that was in 2022 before that sharp drop over here from 30k to essentially less than 20k. So, or even the cliff over here before that drop between $6,000 to $3,000. So this is kind of an area which has a very high risk, especially in the bear markets. As you would notice, the price action stays over here, creating a false sense of belief that the price action has bottomed, and then eventually the floor falls out. If and when the market presents that risk level 5 or risk level 4 for Bitcoin in 2026, that's when again all of these models, by the way, are live, and they are not, this is not a dynamic model. This what is risk level 3 today might not be risk level 3 tomorrow, but what was risk level 3 for Bitcoin in 2018 would stay the same. So we do not change anything in the historicals. Whatever happens is only based on the ongoing price action or the future price action of Bitcoin. So these models get updated every single day to reflect what's the risk level at any particular time for Bitcoin. So for example, since February began in 2020, January began in 2020, late January, early February 2026, the difference between the price and the time weighted average price went down from 187% to at one point at around 129%. Now it's back up at around 138%. The time weighted average price is an increasing price function because this takes all of the days that price action, average price of all of the days that price Bitcoin has been trading since 2014, late September 2014. So more than around 15 to 16 years, sorry, not 15, 16, 11 to 12 years worth of data at a daily level for Bitcoin informs this price, which is not just looking at the current price, but understanding the price of Bitcoin through the gravity of time to look at where Bitcoin has, as an asset, has spent its entire life. So these kind of models help identify if you are beating the clock in terms of Bitcoin accumulation, which is again essentially when the risk level is between risk level 1 or risk level 3, which is an indicator of historical accumulation zone. But for Bitcoin, especially as the asset matures more and more, risk level 4 or even risk level 5 might make a compelling case, because again, nobody knows that the price action has to go to risk level 3 or even for that matter risk level 2 or risk level 1. But as the logic was for the regression based models, that as we move further down the risk levels, the likelihood that the price action has to go to risk level 1, again, to wait for a risk level 1, one would have to wait for more than 11-12 years since 2015 for Bitcoin to go to risk level 1. Similarly, for risk level 2, that hasn't happened since 2019, so almost 7 years now. So risk level 3, at least some hope, at least in the last bear market in 2022 towards the end of December 2022. Risk level 4, slightly better scenario, at least in that 2023 March drop price action presented that risk level, and in risk level 5, that was at the accumulation till almost towards the end of September 2023, early October 2023. Risk level 6, all the way through that October 2023 drop. So price action has not seen risk level 6 since October 2023. So I think it's kind of due, especially as the bear market here kind of matures. So with that, the time weighted average price for Bitcoin, the current time weighted average price for Bitcoin is at around 27K. I'm not saying that the price action has to go below time weighted average price. It hasn't done that. Bitcoin has not done that since 2015. So there is usually a gap between the price, and that gap is also increasing. From 2018, that gap was 11% difference between the price and the time weighted average price at the bottom. In 2022, it rose to 24-25%. This time around, if it rises to 35 to 36%, and if let's say at the floor, now the time weighted average price is at around 27K. Let's say whenever Bitcoin bottoms, the time weighted average price also grows to $30,000, as it might take several weeks to months for Bitcoin to make that bottom, potentially in the second half of year 2026. And if the time weighted average price makes that growth right now, again at the beginning of 2026, the time weighted average price was 26K. Now it's at around 27-28K. Going to late 2026, time weighted average price at 30K, with that difference of 30-35%. So that's 1/3 of 30,000 is 10,000. the bottom for Bitcoin per this model could be at 40K. So that's just an extrapolation. So looking at all of these models as Bitcoin enters that accumulation phase, what makes more compelling case is for an aggregated bear market bottom strategy based bottom based prediction model. This is tuning out the individual noise of the time weighted average price model, the regression risk model, the 20-week simple moving average price based risk, providing a base bear case for Bitcoin this time around at around 41K. This is the bottom price of the potential bottom discussion or a raw number for that bottom discussion for 2026. This is the base prediction, and if there is a worse scenario like a recession in the macro environment, then this model predicts that price action could bottom at around 32K. So 41K in the panic case or even in the base case, that's just where the time weighted average price floor might be then extrapolated floor of the time weighted average price, and panic case at around 32K. With that, what we can conclude with is that now that price action is getting rejected of that 80K level or sub 80K level at around 76 to 78K level, the first major stop for Bitcoin, if there is one candle akin to that June 2022 drop, the first major support might be at around 54K. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.